What's going on, everybody? TDR, Trade to Black podcast, presented by Flowhub. Midweek, how everybody's doing? I hope everybody's doing well here on a Wednesday. We've got some good guests coming up here today. Adam Stettner, he's actually one of the best speakers that we've seen across the conference tour in the cannabis industry. He's going to come on first time to the podcast, runs a company called FundCanna. He's going to provide some data that I think is going to grab your attention. The industry, as we know, it's a $30 billion industry, but as much as $4 billion right now are in delinquent payments. So is that a systematic liability? Yeah. So how do we change that? How do we fix that? And more importantly, why it is important for you, the investor, to understand what's going to happen here in 2026, as well as John Pinto will come on in our second segment from Soje Capital. He's one of the institutional funds that are invested in the cannabis space. We've had lots of conversations with him over the past couple of weeks, including obviously the major pullback last month, December 18th, as to why it happened, how it happened. Yes, many people are already realizing how it was all brought down, but what is the mindset for institutions looking at rescheduling and the cannabis space here in 2026, and what will it take for them to enter in this space? So some fascinating conversations that are going to take place here on a Wednesday. So thanks for checking into our latest TDR Trade to Black presented by Flowhub. So with that, let's welcome in AV on a Wednesday. Good to see you. And two new guests to the podcast, but important conversations. And I know we had some good conversations with Adam last week, but that was a stat that really grabbed our attention as far as the amount of delinquent payments. And then John Pinto afterwards, just to get his take on how institutions are, I guess, viewing this space right now, because as a retail investor, I'm sure that has a lot of people's attention.
Yeah, it'll be two new conversations with two new guests that are topics that we haven't really covered in depth. So I mean, it's good. I mean, it's just growth as the industry grows. Our Rolodex grows and our guests grow, and everything just keeps revolving. Marijuana Moment did report, though, around like 3 that the DEA still have not addressed the interlocutory appeal briefing schedule. So I mean, they're stalling a little bit, which they do have the option to simply withdraw / invalidate, setting the briefing schedule and just allowing the DOJ to move forward. So that's one thing that everybody should be watching in the next couple of weeks to see what happens, because I feel like that's the linchpin that will signal that Bondi is truly turning the gears on her side of the equation.
Well, I think that's telling too, as far as timeline. And there's been a lot of chatter here in the last, I've been looking online, people hoping something is going to come imminent, but that's telling. Based on that story, then, are we looking at possibly another week, 2 weeks, 3 weeks before? Well, I don't want to sit here and ask you, when do you think this signature is going to happen? But if a story like that comes to fruition, then clearly this is still probably perhaps weeks in the making still. So I guess we manage expectations accordingly.
Yeah, I mean, my expectations are, like I said, about a month ago. I mean, sometime between now and the end of Q1. I don't have an expectation in weeks. I'm not thinking in days or weeks anymore. This is the cannabis industry. I mean, we saw Donald Trump said a couple of weeks, took a couple of months, so almost 2 quarters. It's not a matter of if, it's a matter of when. And I mean, when is going to be when they're good and ready to do it. But yeah, I'm not thinking in terms of weeks.
Good to see everybody on here today. Phoenix Dave, along with David Burke. Good to see you. Mitch, as always, 420 at this point again, he writes, but let's hope it's not that long. But yeah, be mindful of some of the stuff as you read between the clues. But with that, it's Wednesday, Trade to Black, presented by Flowhub. Let's get into our first segment as we talk about some interesting data, as we said off the top. Let's bring in the CEO of FundCanna, Adam Stettner. First time to the live stream. Great to see you. And how are things?
Things are great. Thanks, Chad. It's good to be here with you and Anthony.
Yeah, I think it's important. Like, we have toured around a lot of these conferences, and you are, one of the conference speakers at a lot of these events. You provide a lot of information that I think is very telling as to where this direction has, I should say where this industry and the direction it's going and where it's come from. But first up, maybe explain who FundCanna is and really how you got involved in the cannabis space to begin with.
Yeah, the short version of that, FundCanna provides access to capital, really in the form, it mimics revolving lines of credit or debt. And the reason we got into the space was because there was a need. And you look at this industry and it's so widely underserved. It made a lot of sense for me to study and understand the supply chain, and how this industry was both banked and accessed capital, both equity and debt markets. And so FundCanna was founded really just to service exclusively the cannabis industry.
So how do you tackle that? Because there's a lot of curveballs and hoops that you basically have to jump through in this space. And it is a conversation that this industry has been talking about since the beginning of when the capital markets picked up. And it's a hot conversation. And still, there seems to be not a lot of progress that's been made here in 2026 pertaining to it.
Yeah. Well, look, from our side, it's a little bit less. And the reason I entered the space is less of trying to understand why others aren't servicing the space, and more trying to understand how I could design financial product that does serve the space. And so that void, all it really did was create the opportunity for me to get in and learn. But it doesn't mean that it's open pasture. It requires that we study, we learn, we establish ourselves as having integrity and the ability to deliver, and then continue to evolve. Now we've been in the space over 4 years. We've learned a lot. Products evolved a lot.
I'm sure,
but there's still a void.
Yeah.
Speaking of I guess learning, we talk about a lot of the larger MSOs. I mean, we cover everything from distribution to cultivation, retail. I mean, what companies are you working with, and I guess what kind of sizes are you working with in terms of loans, or is it a function of the underwriting process is sound? If the economics make sense, we kind of make a lending decision on those assets.
Yeah, so it's a little bit of everything you just said, Anthony. It's the smallest company we've worked with is a few $100,000 annually. That's pretty small in cannabis. And the largest company we've worked with is it's north of 500 million annually.
Okay.
But I would say that our average, I don't want to call sweet spot because I like everything that works, but the typical companies we're working with are a few $1 million, let's say, to $50-60 million. The bulk of our client base falls into that. I realize huge band. But that's the spread.
Well, I guess you mentioned you developed the product 4 years ago. I guess kind of just diving into more of like the minutia, like what are some of the interesting insights that you've kind of brought forward, I guess, in the 4-year cycle of what you've seen? Because I mean, when we talk to a lot of lenders, especially, and even investors in the space, I mean, there's the sector's constantly evolving and constantly changing, and there's usually some surprises along the way.
Yeah, well, there are a lot of surprises along the way, and I've learned a lot. But my approach has always been, it's not about what I think I know. I don't want to apply ego. And everything I've done, I would sum it up like this. Everything I've done historically, I've been in lending or providing capital for well over 20 years. All of that's almost like an addendum to a handbook that I use for what we do here, because we had to write a new handbook because cannabis is so unique. And that's in part because of legal structure and otherwise. But there's been a lot that we've learned about payment cycles and revenue cycles and geographies and different segments of supply chain. All of that has helped us to evolve not only our underwriting, but the product. Really, the important thing is whenever you're providing capital, you have to remember, all too often, someone comes up with a credit model and then they want their clients to fit their model. I kind of started in reverse because of how unique cannabis was. And the desire was understand the industry, understand how the supply chain works, and then try to design a product and a credit model that fit where the industry was. The evolution of that, because now we're in the industry, as the industry continues to evolve, so does product and underwriting model. But I think the reason this has worked both for us and our clients is because we didn't start with this. We know what to do. We come in with a credit model, like do as we say. We went the other way. What do you need? How is this working? What are your pain points? And then we built the product and the model to accommodate that. And hopefully that answers the question.
Yeah, absolutely.
Well, I think that, look, I've been doing a few videos recently about how the industry is going from survival mode to strategy mode now here in 26. And I got to ask, what is the challenge that companies are currently facing here in 26? And how do you, I think it's important for our audience to understand what the current landscape looks like, because there was a stat that you said to us last week. It's a $30 billion industry, and as much as $4 billion of that is delinquent payments. So A, how do we get here? And if we are going to get into that next stage, what needs to get fixed, and how do you fix that?
Yeah. And it's a great question, and I won't pretend that I know definitively how to answer every issue that comes up. But what I'll say is, you think about the enormity of what you just said.
Yes.
$4 billion on a $30 billion industry. I mean, in essence, what's happened here is vendors have become lenders. And that doesn't, I mean, forget the fact that it kind of rhymes. That doesn't work. Vendors in every other industry are not lenders. Now, we extend terms, but that's been a function of necessity. So that relationship of vendors extending terms, they're releasing product, and then they're hoping that 15, 30, 45 days later, they get paid. But they're not. And so we've got terms that don't match revenue cycles. And it's very difficult as you go on to pay your bills on time when you're not being paid on a similar timeline. And so that is a huge problem. So when you ask me, what are some of the things we're seeing? We continue to see this delinquent AR issue. When we look at balance sheets, we see both accounts receivable, AR, and accounts payable ballooning on balance sheets. But you've got an issue where you don't really see financial tools that smooth that out. Now, in every other industry, those tools exist. In every other industry, you can use Dun & Bradstreet and credit bureaus and to do research on your client base and form, in essence, an opinion about their ability to pay. The other is we've got oversupply because there's disparity in licensing. You may have more cultivators licensed than you do dispensaries. And so, forgetting the illicit market for a moment, there's a lot of choice. So now, if I'm a purchaser of goods, I owe money to one of my suppliers. I haven't yet derived revenue, but I need more supply. If they won't ship to me, I go to a different supplier. And so now I become delinquent with one, and I still am able to purchase goods or inventory. And that cycle continues. Then as revenue comes in, if I want to repair the relationship, I make payment maybe on the most delinquent or the product that sells the best.
Right.
So, and that is a cycle that we see most often. But what we've done is design product to try to mitigate this. Instead of prolonging the issue, what we're trying to do is bring the financial products that I've used in traditional commercial funding scenarios and modify them to help both sellers and buyers so that we can match repayment cycles to revenue cycles, thus getting vendors paid on time and giving the purchasers of goods time to make payment as they sell through.
One of the we talk a lot about rescheduling, obviously, as a major regulatory hurdle that we're going across. Do you see that? And one thing that we haven't talked about is, let's say, the maturation of these businesses from just an organizational perspective internally. Do you see with that regulatory change, with rescheduling, 280E goes away, these companies get a little bit of a greater cash flow profile, their credit strength improves? Do you see them maturing organizationally as well? And let's say other individuals from enterprise level industry start to come in and clean these organizations up industry wide?
So yes to everything you're saying, Anthony. I think you're hitting. This is a relatively young industry to begin with. Now, again, I realize there's a legacy segment to this industry. The cannabis as a product or a plant is not a young plant. It's not a young product. But as a legal industry, it's relatively young, right? We're talking give or take a decade. And there's a lot of maturity that needs to occur. And I don't mean on the part of individuals and operators. I mean the rails that we're all using to operate. And so, yes, rescheduling helps a lot. Why? Well, it's federally illegal, and there are disparate rules across 40 some odd states. And you've got banks that are hesitant to come in, even serving as deposit institutions. But we don't have a lot of the access to financial product and guidelines as to how we can operate most efficiently. Every other industry utilizes debt and factoring and various tools, all of them. Nobody pays upfront for their goods in other industries because your sell cycles take longer. And so what we have to do as an industry, first, to answer your question directly, when we reschedule, when this takes effect, and I realize, you're opening there, and I agree fully with that. We need the DOJ to sign and then go through some of these lawsuits, and we'll come out the other side. When that happens, 280E goes away. Instantly, there's more cash flow. Balance sheets look better. It helps us mature. The question then is, what do we do with the excess liquidity? And it isn't just about profitability. It's about taking a step back and thinking about strategy and resource allocation and how that capital gets used. But from my perspective, everybody's balance sheet will look healthier. It improves, debt service and access to capital. More banks will come in. It will reduce friction in every area. I mean, insurance and banking and capital markets. I don't think it's a light switch. And I've spoken about this before. Capital markets, not like everybody will be uplisted the next day on NYSE. But it will create a lot of momentum.
What is some of the strategies you're seeing and hearing if this 280E does go away? Because again, as I said earlier, if we move from survival to strategy and balance sheets are healthier, it's a win-win, obviously, for the industry, and it's long overdue. But like you said, okay, what is the game plan? And I know that's a broad question because every company is different, but there has got to be stuff that you're seeing and hearing as to what's going to be implemented where companies can start focusing on innovation once again versus trying to save capital like they have over the last couple of years.
Yeah, well, we're beginning to see it already. I mean, and you've reported on some of this. M&A, just since the new year, M&A has picked up pretty dramatically. Now, again, that's on the signing of the executive order. We don't even really have law yet. But I think what it's doing is reducing friction. There's a light at the end of the tunnel, and people are beginning to look and think, as this occurs, what do we do with capital? Some of that is mergers, and then expansion is a pretty big one. What we're seeing is there's some that are single vertical operators that are now wanting to become vertically integrated. So you may have a cultivator that wants retail now. Gives them a little bit more flexibility, and they will have more free cash flow, and they want to control a little bit of their supply chain themselves. We have some dispensary owners that are expanding or wanting to open additional stores. And it's all because they realize they're going to have more free cash flow. But I think every operator views their business a little bit differently. And from my perspective, it's less about my opinion and more about making sure that we're able to service all of these areas of desired growth.
Well, you mentioned that part of the FundCanna product acts as, let's say, middleware to smooth out the cash flow cycle and alleviate some pain points, let's say, within the balance sheet. Are companies also using your product to, let's say, grow? Like, I have an overwhelming demand. I just don't happen to have the capital to outlay to purchase that product. I come to you, and I can now increase my purchasing power and then just increase growth from a top line perspective.
So a good example of that is, it's random, but let's use manufacturing as an example. If a manufacturer of anything, tincture, edibles, you name it, if they have order demand, they have to buy all the inputs, biomass, right, labor, and in order to fill that, they have a cash outlay issue. And so yes is the answer, because what ends up happening is if we give them capital, they can afford to take on additional orders, or candidly even market. They may not have the excess demand today, but they believe that their product lends itself to more demand. whatever that is, they're kind of stuck right now. And so when we provide capital, it enables them to know they have bandwidth or elasticity to fill more orders. They have to go buy the raw inputs, pay the labor, get more lab testing done. All of those are front-end loaded costs. They can't really afford to scale because they're kind of like a hamster on a wheel. They're waiting for the revenue to come in before they can fulfill more orders. That locks them up a bunch. And cannabis is, I don't want to say it's unique, but it's exacerbated in this industry because of this notion of not only high taxes, but short terms that don't match revenue cycles.
Correct.
Right.
You can unlock that with financing.
Well, I'm sure you're speaking to many companies across the country. One state that is next to me is Michigan, and this wholesale tax that's going to increase. And we talk about 280E, but a wholesale tax, I forget the number off the top of my head, and you probably remember
24%.
24%.
Yeah.
Correct.
The timing obviously is crucial right now. Like, maybe is there any examples as to like who you've worked with in the past and what top line revenue growth basically looks like when they're working with you? Because as I said, there's some challenging times that are right now facing a lot of companies in the space. But one thing that obviously grabbed my attention is in the state of Michigan, where there's a increase of a wholesale tax of 24%, which is going to be catastrophic for the market itself.
It is. And unfortunately, it comes on top of incredible price compression to boot in Michigan, right? So yes, but again, this is one of those things. Now, it doesn't fix an underlying problem, but having access to liquidity enables you to continue to either scale or operate. And then the elongation of terms to repay that. So unlike normal operating cycles where your bills are due in cannabis, typically around the 30-day mark, we have terms that range from as little as the operator wants, because they can pay any time, but as far out as 2 years. And so it gives this freedom to maneuver in a circumstance like Michigan. Now, we work with, Michigan's a great state for us, and I would say it's certainly always in our top 5 given the size of the market. I wouldn't say that payment of tax is a primary use case, but I would say that compression on margin due to tax bills coming due, they may draw so that they can operate the business in other areas while remaining compliant and not risking licensing. Because at the state level, it's different at the Fed. But at the state level, if you don't pay taxes, you risk your license.
For sure.
At the federal level, you can be on payment plans without risk to the license in most cases. So paying that increased Michigan tax is vital for sustenance. But you don't want to be in a position where you pay your increased tax and then you can't continue to operate. So having liquidity is a huge off-ramp.
Yeah, and then you look at the flip side, VA perhaps could flip to adult use this year. We're hearing some positive things out of PA. So like, what opportunities does that then present when you look at it from the opposite end of the spectrum?
Yeah, well, and same even like Ohio as well. When that was going on, we saw a lot of medical providers that wanted to expand into adult use or recreational. Same, it's the same kind of thing. Like, how can we assist? Look, like I said, every industry has it. You name it. It's from entertainment, restaurant, bar to retail to you name it. Outside of cannabis, even construction, specialty trade contractors, they're all using other people's money to expand or evolve their business. Cannabis doesn't really have that access, and it's ridiculous. So as states come online, it's really important that they have access to liquidity. And that money can be used to expand or evolve from medical into adult use, and or even evolution of their licensing and more doors. So yes is the answer. We're already working with the medical side in those states. You take a state even like Florida that went through that false start with the petitioning. We saw an uptick in Florida, but we continue to work in Florida on the medical side. The same is true of Virginia, Ohio, Pennsylvania, and some of these other states that might be transitioning.
Yeah. I'd be curious to see if there's going to be new companies that come into this space once rescheduling does happen. Anthony, you kind of touched on it a couple weeks ago, or actually a couple shows ago, but what that does for the actual industry itself, considering the current circumstances that we're in now. But overall, Adam, like, are you seeing here in 26? Yes, we talk about some of these stats, but how are you viewing the space as a whole, as to how it's going to grow and the changes that are going to be implemented here in 26?
Yeah, I mean, I think we're at a fork in the road. Now, the industry's been at forks prior, but the fork that we're at now is really the most legitimizing. And it may not be the best way for me to say it, but momentum matters, perception matters, normalization matters. And I think 26 is a year where we're going to begin to see more momentum, more wide acceptance. And I realize that for those of us that are around this industry, we already feel that way. Yeah. And although we've got voters, ranging between 70 and 88%, depending on which stat you look at, that want legalization of cannabis, but there's still a perception, not only of vice, but of the illicit nature because of the Fed's stance on this. And I think as the federal view evolves, you're going to see all of these others get dragged along. We're at the very beginning, and when I say fork in the road, we're going to veer off toward more acceptance, more normalized views, perceptions that enable this market to grow, expand. But we're not at a place where we want, right? We still won't have interstate commerce and normalized marketing and the like. And it's not as if banks are going to come rushing in.
No,
they won't. There's expectation setting. But nonetheless, I think momentum definitely is on our side right now. And it's the first time, certainly in the 5 years that I'm in the space, the first time we've seen across both sides of the aisle, in every branch of government, where cannabis is not only on the lips of politicians, but all of them are for normalization in some capacity.
Yeah, I think the underwriting is going to remain the status quo as to people here in the industry. But as far as banks, I don't think they'll be rushing in. In fact, Anthony and I, we had that conversation with Peter Sack a while back, but he was saying, like, in some ways, lending won't be rushed in, but you'll see bank accounts and credits, and that's where banks are definitely going to play a role in the early stages. And I can't help but feel like that's pretty accurate.
Yeah.
So anyway, listen, appreciate obviously for checking in. Good little education here, but we're going to have you on a lot more in the near-term future here just to get more educations. But I want people to get and understand as to, look, when you read a balance sheet and some of the numbers that show up every 3 months, there's things that you need to understand what the process is. So let's understand what that process means when people basically read some of these numbers and how you get here from point A to point B. But appreciate obviously the check-in here today. I've got I'm predicting good things for you in the future. And the reason why is because I found out today that you have a person that works with you with the name Shad.
That is true.
I honestly cannot believe this. Yeah, I thought I was alone, my friend.
Our head of finance is Shad as well. 1D. He dropped the second D.
I got 1D.
Yeah.
Too funny. Listen, appreciate you for checking in, and we'll keep in touch, okay?
Thank you. Thanks for having me, guys.
All right.
Thanks, Adam.
Thanks, Adam. Appreciate your time. All right. Can you imagine that? I'm not the only guy with the name Shad.
No.
Oh, how about that?
It's the second one that I've heard of.
I know, right? Well, listen, let's keep today's podcast going. TDR's Traded Black presented by Flowhub. And great interview again as well we got coming up here. Let's bring it in first time to the podcast. He is the founder and managing member of Soje Capital, and that is John Pinto. First time to the podcast. Great to meet you. How are things?
Good to see you, Shad. Doing well, Anthony.
How's it going?
Good to meet you.
As well as a cannabis investor can be doing.
Yeah,
so, which is a bit of tough go.
Yeah, it's been very tough. You and I have had some conversations a lot over the last couple of weeks, including back to what happened the day of the executive order and how this got pulled back. And again, another friendly reminder as to how fragile this industry really is. A lot of moving parts here that we want to begin. But first up, look, it's always good to have somebody on that represents institutional capital within this industry. But how is the, institutional side viewing this space, in your opinion, here in 26? I know there's a lot of change that could be on the horizon, but we need to manage expectations that are, what are those changes going to need to be implemented in order for institution to come in here and be interested?
Right. So maybe just a clarification, most of my investors are not institutions. I have some very small ones and folks that work at institutions. I've run capital, that's institutional capital before. That was in a broad consumer market hedge fund.
Yep.
In a cannabis hedge fund, there are no institutions left. It's institutions that once were invested through other funds like mine, really have been gone from the space. They just can't have the look through to a Schedule One, and well, that was different some years ago. That's really the case now. And I was thinking about, the title of your of today's program is I'm not sure that institutional capital is waiting. I think they've forgotten in many respects.
Yeah.
What this sector is, and forgotten because they've been burned, so hard before. And of course, there's some people looking, and there's some debt providers that are still in the space, and some wealth managers that are pseudo-institutional. They're still invested in different ways. But I think the storyline and thinking, Chad, we did talk a lot about what happened December 18th, 19th, and how it felt like the rug was pulled under when it should have been a celebratory day. And I think that is the case, but there's also, there just is a very deep level of mistrust of when will this actually happen? When will some sort of law or federal regulatory change be enacted? And I think your previous guest, and that you guys have highlighted as well, is when it happens, when it's actually a final rule, and then it survives Barr and Sam suing to have it overturned, and more letters and so forth from senators and congressmen. When that actually happens and it formally becomes a Schedule 3, that is a whole new game. So I think that is accurate. We are a lot closer than we were before. We have a president who clearly wants to make this happen.
When looking at, or even classifying, let's say, institutional capital, I mean, the way that the sector is engineered right now, do you think that capital will even look at public equity from an investment standpoint, or they'll stick more to fixed income, the debt markets, other alternative ways, let's say, to invest in these companies, especially from like a balance sheet perspective? I mean, these guys are smart enough to understand the leverage on these companies and what the intrinsic value is of the public equity. I mean, do you see that happening?
100%. Yeah. So I think you're right. I mean, there's all different levels of what institutional capital means. There are wealth managers that act institutionally, have institutional type due diligence levels, but they manage money offshore. So maybe they don't have to follow as many SEC reporting guidelines. There are hedge funds that are hedgies, that are maybe under the cap, and don't have to, do as much reporting. And so there is a whole continuum of investors, institutional type investors, that and the way that, I think the best way to think about what will happen is it'll just be incremental, with one group coming in, giving a little bit more cover for the next group. A portfolio man, an analyst at a hedge fund right now, and those are the first to come in, the smaller hedge funds, will not go and die on the cross to say, hey, we got to put this in the portfolio. It's an OTC stock or CSE stock or whatever. It's just like, not going to happen. And MSOS is a tough one. Everybody knows that stock is quite, in many respects gamed, or just by the virtue of it being the only NASDAQ listed stock that really represents the MSOs. Obviously, you've got IPR on the New York Stock Exchange and some other variants. It has a turned upside down dynamic, and Chad, we talked about this, where on that day of the executive order, the notional value of the market cap traded of the MSOS was 400% of the underlying constituents, and that is usually a 10 to 20%. So totally reversed scenario.
Think about that.
it's shocking when you know. So but I do think that you will start to get some folks coming in and being able to own some OTC stocks or TSX stocks or CSE stocks directly. But until you get these stocks listed on the exchanges, you're not going to get true institutional capital. Plain vanilla, long plain vanilla, T Rowe, Fidelity, small cap consumer, fund. And by the time that they are willing to do it, the valuations will be very different, but they'll be forced to do it.
So you do think that we walk before we run, look, we need uplisting for sure. And we've had this conversation for years about this. But in the event, I think people are going to be watching closely as to FINRA and how that's going to be written once rescheduling is announced and if there are changes that are going to be made. But, obviously if that changes and it's favorable, I would anticipate more and more institutional capital to get interested in this space because it doesn't allow them right now. But regardless of how that is framed or worded, do you still see slowly but surely they're seeing this, they're talking about this, they're seeing news out of Washington that they're slowly sprinkling in, and will probably continue that trend in the event that rescheduling happens, but more so, as you're saying, that they need actual uplisting?
Well, I think, you're going to get the service providers talking a lot first. This is the way this industry, the Wall Street works, is the service providers, the custodians, the clearing agents, the brokers, the investment bankers, the commercial bankers, all of those, they're the ones that are going to, that see the first money. And so they are certainly looking at this. And obviously NASDAQ wants the listings. New York Stock Exchange may want the listings.
Yeah,
and so, you're gonna hear from them, and it makes more sense than the actual funds themselves and the investors themselves. There will be some that want to be kind of out front, but I think correct. I mean, once if we get FINRA to rewrite the anti-money laundering and know your customer guidelines that doesn't have holding a cannabis stock a felony basically, or because you're aiding and abetting the illicit controlled substances. Once that happens, then you start to get potentially some of the wealth managers that allow for those stocks to be custodied on their platforms through the JP Morgan or whoever the custodian is, and so once you get that, and you'll get that before they are listed, they're uplisted.
Right.
So you will start to get the coming back of the portfolio managers at such and such fund that used to invest in this space and got knocked off the head. Say, okay, I'm going to dribble a little bit in. I'm going to front run this a little bit, and I'll hold some in my Morgan Stanley account, or so forth. And once it's on on those platforms, you'll start to get brokers calling to try to get their clients into these stocks a little bit more before the uplisting.
Yeah.
And as I said, uplisting is in uniform. GTI will be first at the door.
Yep.
And then Curaleaf will be right behind there, and you've got a couple of others that are very close just because they've been filing basically SEC guidelines, filings, and are fully ready to go. And so you will have this is as I tell people, this has kind of been the long game of incrementalism.
Yes,
of acceptance.
And have you gamed or thought about if FinCEN decides to update their guidance, that'll kind of make SAFER obsolete to a certain extent?
No. I think SAFER will never be obsolete. Okay. I think there will be folks that are looking for a safe harbor from Congress that are absolutely saying, I want to make sure that it isn't some pseudo regulatory body that's changing this, and just give me the full kit and caboodle. So I do think that, but that's okay. I think we recognize, and I think there are the votes. As people know, it passed the House 7 times and never got seen by the Senate.
Yeah.
And so it's a very different time, but the social stigma of cannabis has taken a long time. That also is a political stigma, and that political stigma is wearing off.
Well, I got to look at this. this was a trader's play. It happened a week before the executive order announced. It caught everyone by surprise, obviously, 40 minutes before the president came out. I was pretty frustrated. I think a lot of people were very, very frustrated with what happened because this is the biggest monumental event I think this industry has experienced in 50 plus years. And this is what happened. When you see something like that, the obvious thing would be like, and that's another reason for institutions just to stay away from this space, given how volatile it was. But do you think that has a lasting effect, or we get past this and then once everything is signed off, it'll just be real reform in place, it becomes law, and finally we can turn the page as to what's happened in the years past?
I think true institutional players that are wise, that understand the plumbing of the system, and who care to spend the time to look at what happened and ask around, or they kind of say, no, this is a total fucking mess, because of course the MSOS is the tail wagging the dog, and there are a number of holders of the MSOS that are quant funds. And could they have been playing a game that plays with the underlying, and then then the MSOS is the only one with actual calls and puts on it. The underlyings don't have calls and puts. You can do all sorts of shenanigans in the CSE in terms of naked shorting or anything like that. And so they just kind of say this market structure is broken for them, and we will wait until we see the underlying be the ones that people are investing in, and that the fundamentals start to make sense, and the earnings releases start to drive the stock returns a little bit more. And so I think but that will take time. And I think that again that means there's more distribution of the underlying stocks. They're held in real plain vanilla portfolios all around by people that say, I've done the kind of math. These is trading at 2 to 3 times sales, 1.5 times sales, and I think sales will be X a couple of years from now, and I think the EBITDA margin will actually improve from where it is now. And that's one thing that doesn't get talked about much, which is part of what happened over the course of 21 and 22, really, especially those years, is as it became clear that the on the street, the illicit market, whether it was the hemp market because of the 2018 Farm Bill and what kind of market was created there, the alternative cannabis market, or because of the regular dealer on the street, they were able to see, okay, what's the pricing in the dispensaries? Boom, I'll cut it by X, and so I'll be on parity with them, but people don't have to pay taxes, whatever. And so you created a situation where most of the analysts on Wall Street and most of the investors, and there were a lot of hedge fund investors who came in with a PA into this sector, said to themselves, wait a second, these guys are price takers. This is a commoditized industry. This whole regulatory framework that the states, you get a license and know you're protected, doesn't really hold because there's no enforcement. Mm-hmm. And so part of what I think, needs to happen, I think will happen, is that as you get these incremental, changes and there is more taxes that are being collected by the states. And that obviously the big kahuna is a federal excise tax. The second that the federal government can put on excise tax on this product, they will have a major incentive, like they did in the Prohibition, like they've done whenever they've taxed something, to stamp out those areas where they're not getting their excise tax. So, there's a lot of things before that. I think we need a law, and that is why SAFER needs to be done. This needs to be in law, that and then obviously some sort of deal where the federal government gets their cut. Once they start getting their cut off top line sales, we have enforcement, and then we have the potential to reverse that whole psychology that occurred, that these guys are price takers. This is a commoditized industry. There's no way to hold pricing and margin. And then you have the Goldilocks scenario, which I'm not calling for yet, but I do think it's illogical. And we've been so beaten, but the logic would be, hey, look, we get Schedule 3, and we then get enough kind of good feel, whether it's SAFER is required or not, to get credit cards. Credit cards are a 10 to 20% bump at the dispensary. So you've
Right.
got all of a sudden revenues rising 10 to 20%, however it is, from credit cards. And so that will kind of scale in. All of a sudden you've got volumes growing 10% across much of the country, but you've got pricing taking away all of that. So all you need is the credit cards to layer on a double-digit growth on revenue, and then a little enforcement, little by little. You've got a $30 billion hemp industry and a $30 billion cannabis industry.
Right.
All we need is 10% of that hemp industry, or half of that, which is flower, to come over, and then you've got a mid-teens growth rate.
Right.
And by definition, you've got a solidifying margin. And so what I'm saying is, people have short memories. And so I think if you have that type of dynamic occurring, you will also reverse the psychology that's occurred at the analyst level that, hey, this industry are price takers. Regulation doesn't really do anything because they're allowing all these other industries, all these other channels to take it from the legalized distribution channel. And I think if that changes, then, in which I think it's logical once federal excise tax comes in, but we're clearly not there next month.
Yeah.
I mean, it's going to take some time, but also with the notion that this industry, for anybody that's doing the math on the MSOs, I mean, it's a value sector. There are sophisticated investors that are out there that can also see that. However, they're not but they're not willing to come in due to the complete broken nature of the market structure. I mean, is this really one of the first industries where retail that's paying attention with the, let's say, just cojones to participate are going to be able to front run smart money that come in? And do you think it's still a value sector at that point in time, if and when real money can come in to where that market structure is fixed? Because it seems like if you're looking at it from a long tail point of view, the industry fundamentals should start to improve before the true market structure from a capital market standpoint is able to get fixed and let that money in to the public markets.
Look, obviously, it's been a painful sector for any investor, retail or institutional.
Yeah.
There are very few good ways to short. The folks making money have those that have truly been swinging, buy extremely low and just sell on the way up, some level. And as well as those playing some quant games and playing the games with the MSOS and the underlying. And so, what I would say is, and the kind of the way that we've thought about it is, look, we're keeping a base in here invested at all times because we don't know when you're going to have the next jump up. We thought that would happen.
Yeah.
And then we would be seeing a double-digit MSO stock price. And here we are at $5, and we're up off of the 2+ lows, but great. And so I do think that it's one that you can play and just recognize, don't set your expectations that any one thing is going to do it until a federal regulation is actually changed.
Agreed.
Or there's a federal law. And of course, everybody's trying to front run that. Everybody's trying to make, and we did think that the signing of the EO was enough to get you to a $10 MSOS. We did.
So
we were wrong.
Here's a question for both of you. How likely is it that FINRA language will be attached to rescheduling? And if it is promising, do we need SAFER in that situation? Because, trying to get everybody on the same page as far as Congress this year, I don't know where that sits, where that's going, but it seems positive that we could get uplisting, but getting a vote, easier said than done. And we've seen that song and dance before.
Look, I'm kind of like out of the game of predicting timetables. If I did, I wouldn't be here. I would have shut my fund, 3 years ago, like most of other people in the industry have. But I do think we are at the point where the votes are really there. You have a very loud prohibitionist group of senators, and then some congressmen. But the votes are there. To get SAFER through, if it's positioned right as a small business bill, as as something that is part and parcel of the executive order and Trump's agenda, but it's also got enough now Democrats that aren't willing to die on a hill on social equity, which was really something that Schumer, of course, kind of screwed this whole shit up in many respects, and Booker by being so. And I, can't put it all on them, but there's a big part on them in not recognizing you take your win when you can.
Yeah, I hear you.
And that one is there now.
Yeah.
The Democrats clearly know you take your wins when you can. And so I think I don't know what order this happens, but as you well know, Wall Street is a machine. It likes to eat, and this is a sector it would like to eat. And there's no money being made off of trading over-the-counter stocks by the Wall Street players. They need these to be listed to make money, and there's and so that machine will kick in. It just needs Schedule 3.
Well, listen, not necessarily looking for timelines, but well for you to say it informed just as far as, this does have enough votes. Well, first step, incremental, as we've said time and time again, let's get a signature, followed by rescheduling. There's a lot of stuff that's got to obviously take place before the final ruling, and I'm sure we're in for a wild ride pertaining to that. But once that all does come to fruition, everything we see and hear is that many lawmakers will view this industry differently. And let's hope this finally gets a floor vote and gets what we want ultimately, because it's needed for the industry to go to the next level. But everything's there. It's just a matter of waiting again, which we do a lot here in this space. But listen, John, appreciate you logging on here today, giving us a little bit of insight and direction. And let's look to continue to have you on as things start to progress on the reform side and what we can expect next from an investment side, both from a retail and institutional level. But I appreciate you logging on here today.
Thanks for having me.
All right. Thanks, John. All right. Good show. Listen, camera wasn't the greatest, but we got a lot of good audio there. So I hope everybody got some good messaging from what he outlined and indicated. What was your take on a lot of the stuff that you heard? And I'm sure it was stuff that you already knew, but I think for everybody watching, it was rather telling to sit here and say Wall Street likes to eat, and this is an industry that they do like to eat. So it is something that they are watching.
Yeah, I mean, I thought it was an informed perspective. I mean, John's someone that I've seen at conferences a couple of times over the years. It's always a good conversation. It's usually a pretty granular, sophisticated conversation in terms of what's going on in the industry. But definitely one of the guys out there that truly understands capital markets and really the opportunity at hand. And I mean, it's true. I mean, this industry right now is a value industry. At some point, the industry is going to turn from value to growth.
Yeah. And
real money probably is going to come in closer to where it flips to growth versus value. So, I mean, if you can read a balance sheet and you fundamentally understand like the MSOs and the opportunity at hand and place your chips in the right direction with the right time horizon, I mean, there's some value that can be created out of the sector still.
So when you say value to growth, we're now entering a stage relatively soon. Everything pans out that we're hoping it to, that a lot of companies will start to perform more on an individual basis versus an industry as a whole. Do you not think?
Yeah.
Which we've been saying for quite some time and is the obvious thing. Any questions or any feedback, comments I should read here? Yeah, he's a great guest for sure. And hopefully everybody got some good feedback there on those interviews. But we got Kyle Sherman coming back on Friday for his weekly segment on our latest Trade to Black presented by Flowhub. So that'll be coming on. We've also reached out to the Organigram team. We are hoping to get their new CEO on probably in the next week or two, but just hearing a lot of rumors that they're going to really dive into the European angle, and why not? Because it totally makes sense for a lot of these Canadian companies that are exporting out. And I'm trying to think if there's anybody else that we've reached out to too. And Luc Mongeau, I reached out to him actually. They had some interesting news as far as pushing out their debt. We've reached out to them again as well. Before I go, just a quick reminder that Trade to Black, as I said, is presented by Flowhub, the retail platform behind the best dispensaries in America. They power some of the largest and most sophisticated operators in cannabis. If you're serious about scaling retail the right way, and if you want to book a demo, visit flowhub.com right now. Anything else you want to add?
It's been a busy week. Got a nice pop in MSOS, and then we've kind of traded down a little bit. Curious to see how the weekend's.
Yeah. Got those option call expiries on Friday.
There's also a lot going on in hemp. I mean, we need to cover what's going on in hemp. There was an extension bill signed by Baird in Indiana that's got bipartisan support. Rand Paul was crying wolf on Joe Rogan talking about the hemp industry. There's a lot of stuff going around in hemp. I mean, they're looking to get an extension as per the CR ban. We'll see if that happens. I don't think it's going to happen. I know there's a lot of people in the hemp industry that do think it's going to happen. I hope it doesn't happen, being quite frank. And then we'll see what happens with Senator Paul and his perspective and what's going to happen moving with that going forward.
Going to do a video on that tomorrow that explains basically what that extension is. But one thing to point out is 3 lawmakers, Nancy Mace, Baird, and I think it was Merkley. And anyways, long story short, 3 lawmakers with 3 different reasons as to why they want this hemp ban basically to be either delayed or not happen at all. And, to me, it just sounds like there's a lot of moving pieces on that side of the story right now with not one unified approach, and it's going on internally in the space right now. So
yeah, I'm not sure. I'm also not sure what Senator Paul was trying to incite and or convey when he was on Rogan and said that the cannabis people hate the hemp people and blah, blah, blah. Seemed a little disingenuous.
Well, there is some, let's not kid ourselves. There is some truth to that. I know we're not one of them. But yeah, to me, it sounds like it's a little bit desperate, and I have seen that online.
It is desperate.
Yeah,
it is desperate. And I mean, the hemp industry, I'm sure, has got PACs that are donating money to Senator Paul. I mean, Senator Paul, if you wanted something, if you have an issue that you want someone that's going to die on that hill, I mean, he's willing to die on that hill right now. I mean, like I said, I'm curious to see where this goes, if that extension and that bill actually gets put through. A lot to be determined.
Yeah, makes sense. We'll have that tomorrow, so make sure you log on at 4:00. It'll be an interesting little video that I've got that explains that more into detail. But to Anthony's point, all agreeing. But yeah, smells of desperation. But the law is the law right now, and it looks like all signs point to the fall, that hemp ban actually taking place. But they're not going down without a fight. But time will tell.
I mean, synthetics and THCA flower need a lid put on them. That's that.
Yeah, and that's some of their argument, and they want to push this out to 2028. And I'm just like, for what? Like, it's yeah. Anyway,
correct.
That'll be on tomorrow. In the meantime, I think that's it for now. We'll see you guys all back here Friday at 11 a.m. with Kyle Sherman. Enjoy the rest of your day, and thanks for checking in your latest TDR Traded Black presented by Flowhub. Thanks, everyone. Hey everyone, thanks again for watching here today. Listen, if you're getting value from us here at TDR, make sure to check us out at TDR Plus. It's our exclusive membership community. Why? Well, you'll see CEO interviews that go beyond business, showing a personal side that you won't find anywhere else, including the biggest names in the industry. Plus, you'll get insights from analysts and day traders on where the industry's headed, both short-term and long-term, and a direct chat group with our team. It's only $7 a month, just 25 cents a day, and it helps support everything we do here at TDR. If you want to join, just click the join button below and become a TDR Plus member today. And once again, a big thank you for being part of our community. So that's it for today. And again, thanks for watching, and I'll see you next time.